Today's Saturday, October 4th, 2025, and this week was kind of crazy for a lot of reasons. Warren Buffett finally made a huge acquisition that I'm very excited about. The government is shut down and there will be huge impacts next week because of it. And next year you're going to be able to add more to your 401k and Roth IRA. So let me just get right into the news for today. The biggest one is definitely around that whole idea of the US government is shut down. So what are we supposed to do about it as investors? And what is it going to look like in the stock market because of this? The US federal government shut down on October 1st after Congress failed to pass new funding legislation. The shutdown is also delaying IPO approvals at the SEC, threatening momentum in the public markets. Now, the market impact on this is going to be that uncertainty just keeps rising. With less transparency on data and IPO activity stalling, markets may become more volatile. Investors may lean more heavily on earnings and corporate guidance in the near term. So what's the big deal? Why does the government shutdown affect us as investors? Well, the biggest news and market movements have been coming from the whole Fed rate cuts and the decision around that, right? Well, the Fed decides to make these cuts or not make these cuts off of things like CPI, employment data, and GDP readings. A shutdown would impact the employment report, inflation readings such as CPI, and GDP measurements. The length of the shutdown would determine if some of these reports are just delayed or skipped entirely. Economic releases from the Federal Reserve should be produced without interruption. This financial data could prove crucial as the Federal Reserve ponders the pace of rate cuts with elevated inflation and a softening labor market. So based off my research, stocks have not been significantly impacted by government shutdowns in the past. In fact, it's been a relatively even split between gains and losses for the S&P 500 during these periods. And the most significant move was a strong stock rally in 2019. Generally speaking, the evidence suggests that the government shutdowns is not the primary driver of stock returns during these periods. Just keep dollar cost averaging, folks. And speaking of the stock market, there was a surge in particular with AI and tech. OpenAI closed a funding round that values it at roughly $500 billion, sparking renewed enthusiasm in the AI semiconductor ecosystem. Major tech and semiconductor names like Nvidia and AMD rallied, pushing indexes to new highs. The market impact was obviously that tech and AI-related stocks are acting as the engine of the rally. But this also raises rotation risk. If sentiment reverses or fundamentals disappoint, these names could see sharp pullbacks. Just know that everything right now is all running on hype and hope. And so if we see an earnings report that's anything less than perfect or stellar, just expect, especially the AI sector, but even just anything in technology, expect that to dive sharply in the next couple of earnings. Now, in a different sector, specifically health or big pharma, big things are happening. So big moves in pharma and corporate restructuring. The Trump administration launched a new direct-to-consumer drug purchasing initiative, sending pharma stocks soaring. Also, Berkshire Hathaway, Warren Buffett, announced a $9.7 billion acquisition. This is its biggest deal in years, and they have that $360 billion sitting off to the side, so they used a portion of that in a big way. I'm going to go over that and tell you about all the new limits for your investing accounts next year, because now you can start adding more to your retirement accounts and HSA and all these different things, so I'm going to clue you in on that. But first, a quick word from today's video sponsor. Super excited to introduce the sponsor of today's video, which is 21 Shares. 21 Shares is one of the world's leading crypto exchange-traded product providers, making it easier and more accessible for everyday investors to gain exposure to digital assets. You know, I've been invested in the crypto world for more than 8 years, and so I really like what 21 Shares is doing. Their mission is to bridge the gap between traditional finance and crypto by offering secure, fully collateralized, and registered investment products traded on global exchanges. 21 Shares offers spot ETFs on major assets like Bitcoin and Ethereum. I love how on the 21 Shares website, I can click into the fact sheet, which gives me all the info I need. With a deep focus on transparency, compliance, and investor education, 21 Shares is helping bring digital assets into the mainstream in a responsible, sustainable way. I always encourage you to do your own research, and so you can check out the Insights section to learn so much. 21 Shares regularly shares timely updates on key industry shifts, from ETF launches to macro market sentiment. Want to stay ahead of the curve on all things crypto and digital assets? Subscribe to the 21 Shares newsletter. You'll get market insights, product updates, and trend breakdowns straight to your inbox. The link is down in my description below, so go check out 21 Shares today to learn more about their products and capabilities. This is not financial advice, and all investing carries risks. Products may not be available in all jurisdictions. Consult a licensed financial advisor. As a thank you for listening to that ad, here's my buddy Basher. He wants you to know that if you have a question for me to answer on next week's video, go ahead and send the question down below in the comments section. Today's video is packed a little too full of news and different things, so I'm not going to go over a question from last week, but get your question in for next week and I'll be sure to answer one of them. All right, so the new investment account limits. Matt the Money Guy on Instagram puts out some pretty cool facts and figures, and on this one he broke it down very easily. As you can see on here, pretty much everything here has gone up about $1,000, some of them $2,000. But the 401k, 403b, or 457, it's gone up about $1,000. And remember, for those of you that are over 50, you can already put more in. Like right now in 2025, anybody under age 50 can only put $23,500. But if you're over age 50, you can put in $31,000. And next year in 2026, you can put in $1,500 more. Right now for both the IRA and Roth IRA, if you are under age 50, you can put $7,000 in now, and next year you can put $7,500. If you're over age 50, you could put $8,000 in this year, and next year $8,600. The HSA's gone up, the FSA's gone up. All of this is great news, and we can be able to put even more in there. My favorite thing about all of this is being able to add more to your Roth IRA. Plan for that for next year, and let's talk about Warren Buffett now. The big move by Warren Buffett's Berkshire Hathaway to buy the chemicals business of oil giant Occidental Petroleum for nearly $10 billion is a double win for Berkshire. I know I've been waiting for Berkshire, and specifically Warren Buffett, to make a move before the end of his tenure, before he exits his role as CEO of the company at the end of this year. And this is a big one. This is a really big one. I still expect him to do a couple more things because he does have all that cash just sitting off to the side. That's why I've been buying Berkshire heavy, and I will continue to do so. And I'm probably going to buy even more at the end of the year or beginning of next year when everybody freaks out that he actually does leave the company. And I'm sure that the stock will drop because of it. But it's going to come right back. The OxyChem business will operate as a strong standalone for Berkshire, while the deal should boost Berkshire's nearly 30% ownership of parent OXY because the Houston company will use the bulk of the proceeds to pay off the high debt load that's dragged down its stock in recent years, said Doug Legate, Wolfe Research energy analyst. It's genius. It's certainly a win plus for Berkshire because it also helps the company that they own 30% of. Legate called OxyChem a steady potential cash cow that focuses on its growing chlor-alkali business, manufacturing PVC resin for piping, construction materials, medical equipment, and more. Its business largely moves with the housing market, which could soon benefit from falling interest rates. It's a low, volatile, uncontroversial niche business that has pricing power given the market structure, he said. So that's very excited for those of you that hold Berkshire like me. So how should we invest in the stock market, especially in this coming week? As stated before, the government shutdown could be something that messes with these possible Fed rate cuts, or at least the decision behind them, if we're not being able to get the economic data that we need and certain reports aren't being put together. Like that article said from before, sentiment is going to rely heavily on corporate earnings. So any big corporate earnings that are happening in October, that are happening right now or soon, those are going to be taken even bigger into consideration and will make the market move a lot. So let me show you a couple of the biggest names, the biggest companies that could move the market, and the date that they're going to have their earnings, so you can put this on your calendar. So I've compiled a list of some of the biggest ones, the date that they're going to have their earnings, the company that it is, and then why it matters or what to watch. That first one is October 9th with both PepsiCo and Delta Airlines. Specifically, PepsiCo It's a consumer staple company, and why we want to watch this or why it matters is that it gives insight into consumer demand, margin pressures, and the cost of goods. We can start to see a pattern with this, and if they are much lower than they've been before, or the company has certain guidance that's saying that we're going to be slowing down even further based off of their data, that's something to keep in mind. October 14th is a huge one. Citigroup, Goldman Sachs, Johnson & Johnson, and JP Morgan. Specifically, Citigroup is a major bank, so we're going to see credit conditions, regional exposure, the guidance that they say. Goldman Sachs, obviously, with investment banking. And JP Morgan is literally the largest US bank by assets. So we need to figure out what's going on with the credit capital, markets exposure. They're definitely going to have something to say. And October 15th is big too with ASML. They're in that semiconductor AI group, and so we want to figure out the supply chain situation, global tech demand. This will be the first insight into understanding how those tech companies' earnings are actually going. And like I said before, everything's kind of been held together and propped up by AI specifically. So this will give us a first look into it. Obviously, ASML is not the same thing as NVIDIA or even AMD or Taiwan Semiconductor or any of these other ones, but it does give us a little bit of insight. As always, I'll be here each Saturday, so I'll let you know what's going on next week. So watch either of these videos to keep you going strong in investing. Remember to keep investing simplified.